Today is April 24, 12:59 p.m. We detected unusual options on Carnival, that's CCL ticker symbol. And the question we want to know is, has Carnival bottomed? Because these unusual options we found seem to be telling us that. And so we're going to identify them and then analyze them. And then last but not least, show you our trade that we did based on these unusual options. Slightly different than these unusual options. So without further ado, here we are. These 10:52 a.m. Trades here, you'll see there's a total of actually 5,000 because these are the same expiration date on June 2nd and the same strikes. This is the 9 strike puts. And so if we look at this trade, you'll also see here that it was one of the lots was done at 45. The other one was done for the price of 44. Okay. We believe these were actually selling orders. And you'll see here on June 2nd, these are the selling orders. We believe a total of 5,000 of them here. You'll see they're open orders. We think that they're selling them because it's also close to at the money. And so we believe that by selling this 39 delta, they're collecting a premium because they are under the belief that this stock is not going to go below $9 anymore. And so you see here, this is 9. Yes, the last trading day on Friday, it had bounced from that 9 here. You'll see that very long shadow of this candle here for the that did not approach 9, about 8.99 over here at 9.07, and it had come up since then. And so there seems to be a potential bottoming process going on here. And so they sold that, and they're willing to basically own 100 shares of CCL at $9 a share by selling these puts. And so by doing that, that's $9 for 100 shares. So each contract takes 900 buying power. And since they did 5,000 of them, that's a $4.5 million capital required, where they are saying they're willing to own Carnival for this much. So this is a large institution that has that much buying power on this trade. And so because this is an indication that they believe they are bottoming, we put on a slightly different trade. We didn't want to use that 900 buying power per contract. What we did instead was we bought the 9.5 calls. And you'll see here, this is our position here. Since 9 should be the bottoming, we believe it will go up from there. And if it doesn't, we will probably just cut our losses if it drops below 9. So by 9.5 calls, we bought that. And then we sold another option that expires in 11 days for the May 5s to at the 10 strikes you see here to collect some credit. And so that's our position there. You'll see here it also reduces our theta decay. So this is our trade. Let's do their trade at that 9 strike to show you what it looks like also. And so here we have their trade originally was this, selling those puts at the 9 strike. Basically, as long as it stays above actually 8.5, you'll see here. Their break even is at 8.5 because they collected a credit of about $45. So that means they can subtract that $9 down to 45. So it's close. So it's about 8.5, right? So that's their trade. It's limited in profit. So it doesn't, it means that they don't necessarily think that Carnival will rally very much, that maybe it'll stay around and trade around this range. The key thing is that they don't think it will bottom, go below 8.5. They believe that it is near the bottom, that it won't go less than that. And so our trade here is this diagonal trade, and which takes advantage of sort of the current position at 9.2. If it slightly moves up a little from here, which we think it will happen, it will start profiting also from a theta decay that will push the profits up, because this is a slightly positive theta decay, and the theta will grow as it goes up in price. You'll see the theta gets stronger. And so if it does drop below this $9 range in here, we can cut our losses, and it's not much of a loss, right? Before it gets all the way down here. This is max loss down here if it's below 8, but we will have cut our losses by then. And so this allows us to also profit, because this is our max profit in a trade like this will be much higher. We can collect up to $42, which is 100% at least from what our initial investment of $40, right? So we don't want to cap our profits. And we can reassess our trade in just 11 days, which is expiring in May 5. And then decide what we want to do then to see if this is profitable. And if it doesn't look like it is profitable and it is deteriorating in the value, then we may just close our trade for a reduced loss. Okay, so that is our analysis of Carnival. Again, this stock doesn't report earnings until much later than most of the other stocks. I think it's back all the way in June 22. So this trade of being done was before earnings. So this is a pre-earnings trade, not an earnings trade. So that's why we were more comfortable, because it does not have that earnings risk. And so we think there is potentially this bottom here around at this $9. And if it does drop below that, about here it is, we'll put 8.9, right click that, create an alert. If it drops below that, we will be notified to close our position. And so that will help us reduce our risk. Okay, so hopefully that was helpful and you learned something. If you did, please smash that like button and subscribe if you haven't, and hit that bell icon, and you will be notified whenever we see unusual options. Take care, everybody.